If you've been in crypto for a while, you know that timing matters. The best time to accumulate Bitcoin and altcoins was during the last bear market when prices were down, no one cared, and sentiment was at its lowest. But right now, we're well into the 2025 bull market. Bitcoin has already made massive gains, altcoins have pumped, and retail interest is surging. That means if you're just now looking to invest, you need to have realistic expectations. Buying late in the cycle comes with higher risk and lower upside. The market is more volatile, price swings are more extreme, and if history repeats, we're eventually going to see a market peak followed by a major correction. But if you're still set on investing now, you need to structure your portfolio differently. Today, I'm going to break down the ultimate crypto portfolio for the rest of 2025. We'll cover how to allocate between Bitcoin, Ethereum, altcoins, and stablecoins, how to adjust for different risk levels, which sectors are likely to perform best in the second half of this cycle, and how to manage risk and prepare for the eventual market downturn. By the end of this video, you'll have a clear strategy for navigating the rest of 2025 without falling into the common traps that late investors make. Let's start with portfolio allocation based on risk level. The key to a strong crypto portfolio is balancing upside potential with risk management. Here are 3 crypto strategies based on different risk tolerances. There's a conservative portfolio, low risk, would be like 60% Bitcoin, the most resilient asset, less volatile than altcoins, 25% Ethereum, which is strong long-term fundamentals, less risky than smaller projects, 10% stablecoins, acts as dry powder for potential dips or profit taking. And then you can do 5% high conviction altcoins, a small allocation to selected quality altcoins. This is ideal for investors who want exposure to crypto but minimal risk. Then you can have a more balanced portfolio with moderate risk. 40% Bitcoin, still a strong foundation, but with more room for growth. 30% Ethereum, a solid allocation to ETH, which has major network adoption. 20% altcoins, exposure to high growth sectors like AI, DeFi, and L2s. 10% stablecoins provides liquidity for volatility and rebalancing. And this portfolio gives a mix of stability and high reward opportunities. And then you have your aggressive portfolio or high risk, 25% Bitcoin, a base allocation for safety, 25% Ethereum, exposure to ETH as a foundational altcoin, 40% into altcoins, high growth potential, but with significant downside risk. And then again, 10% in stablecoins provides liquidity for dips and de-risking. This approach is for risk-tolerant investors who are willing to take bigger bets on emerging sectors. Now let's talk about where the biggest opportunities might be in the second half of 2025. Historically, later stages of the bull market see certain sectors outperforming. Here's what to watch for: layer 1 and layer 2 blockchains. Ethereum is still the dominant smart contract platform, but Solana, Avalanche, and layer 2 networks like Arbitrum and ZK Sync are competing heavily. If this cycle follows past trends, Ethereum will perform well, but some alternative chains will see bigger speculative runs. AI and crypto integration. AI-driven crypto projects are one of the biggest narratives right now. Some of these will be real innovations, while others will be pure hype. The key is looking for projects with actual adoption and strong teams, not just those slapping AI onto their marketing. Also, DeFi 2.0 and tokenized real-world assets, RWAs. DeFi is evolving and real-world assets are becoming tokenized. Protocols offering exposure to real yield, which is tokenized bonds, real estate, etc., are gaining traction. Institutional investors are entering this space, and Ethereum-based DeFi is still leading the way. Meme coins and speculative altcoins. Like it or not, meme coins tend to pump the hardest in the final phase of a bull market. The problem? They also crash the hardest when the cycle ends. If you're going to trade meme coins, treat them as pure speculation, take profits aggressively, and don't get emotionally attached. Now let's talk about risk management, because this is where most late investors go wrong. If you're buying in this late, you need to have an exit plan. Now here's how to protect yourself. Take profits in phases. Instead of holding everything until the peak, Set price targets and sell gradually into strength. Rotate profits into safer assets. If altcoins have made big gains, consider moving profits into Bitcoin or stablecoins as a hedge against volatility. And be cautious with leverage, or just don't touch it at all at this point. At this stage in the cycle, liquidations can wipe out accounts fast. If you're using leverage, size your positions carefully and set stop losses. Prepare for the inevitable bear market. This means securing your funds in cold storage, avoiding overexposure to hype-driven coins, and understanding that gains can evaporate fast. To recap, if you're investing in crypto now, you need to accept that you're entering late and adjust expectations accordingly. Structure your portfolio based on risk tolerance. Bitcoin heavy for stability, altcoin heavy for risk. Focus on strong sectors that still have upside, like L1s, AI, and tokenized real world assets. Manage risk aggressively by taking profits, reducing leverage, and preparing for volatility. I want to hear from you. What does your portfolio look like for the rest of 2025? But please protect yourself and your privacy. Don't name dollar amounts. Maybe just use percentages if you're comfortable. Are you positioning for more upside or are you taking profits? Let me know in the comments. And if you want real data-driven crypto strategies to protect your portfolio, check out learningcrypto.com. It's the best place to learn how to navigate the market with confidence. Thanks so much for watching. I'll see you in the next video.